Welcome to Prime Capital Insights, a channel dedicated to breaking down finance in a simple, beginner-friendly way, so you can understand money, investing, and wealth building with clarity and confidence. Disclaimer: this is financial education, not personal financial advice. Most people think investing is only for the rich, but the truth is, anyone can start, even with a small amount. You don't need more money to start investing, you need the right plan. And today, I'll show you the first steps that can change your financial future. Do you know what's more expensive than a bad investment? Never starting at all. If you feel confused or hesitate to start investing, you're far from alone. Across many countries, younger people are beginning to invest earlier. For example, according to the World Economic Forum, 30% of Gen Z report they started investing during their university or early adult years, while according to Investopedia. In the US, more than half of Gen Z ages 18 to 25 already own some investments. Despite this growth, many still wait, worrying that investing is risky or complicated. That hesitation can cost you years of potential growth. So today, let's make investing simple, clear, and beginner-friendly. Step 1. Understand risk. Let's start with something most beginners misunderstand: risk. Every investment carries some level of risk. Stocks, bonds, real estate, index funds. Nothing is completely risk-free. But here's the important part. The goal is not to avoid risk. The goal is to manage risk. A lot of people delay investing because they feel they need to protect every dollar. But if you never take any risk, you also never open the door to growth. So instead of fearing risk, understand it. Never invest money you might need next week or next month. Invest only what you can leave untouched for a while. That's your breathing room, and it reduces pressure. And always remember one simple truth: investments that offer higher returns usually come with higher risk. This is why it's important to take your time, learn slowly, and build confidence instead of rushing in something you don't understand. Step 2. Think long-term. Now let's talk about mindset, something far more powerful than money. Investing is not a quick money hack. It's not a lottery ticket. It's not about becoming rich overnight. Investing is a long-term game. Real wealth is built over years, not days. If you look at the world's most successful investors, whether it's Warren Buffett or everyday long-term investors, they all share one core belief: stay invested. Markets rise, markets fall, and they always have. But over long periods, they move upward. And this long-term upward trend is what builds wealth. The longer you stay invested, the more time your money has to grow through compounding, the quiet, reliable force that multiplies your money while you sleep. Think of compounding as planting a small tree. At first, it's slow and boring, but once it grows roots, it expands faster and faster every year. The same is true for your investments. Step 3. Start small. The biggest myth in investing is that you need a lot of money to begin. You don't. You can start with the price of a daily coffee, literally. What truly matters is not the amount, but the habit. Even small, regular investments can grow into something meaningful over time. Most people wait for the perfect moment to invest, when they earn more, when they have savings, when things settle down. But in reality, there's no perfect moment. The best time to start is today, even if it's small. Every big investor began with a small first step. What separates them from everyone else isn't luck, it's consistency. Step 4. Diversify. Simple and beginner-friendly. Let's move to diversification, a fancy word that simply means don't put everything in one place. Putting all your money into one stock is like betting everything on one horse. If it wins, great. If it loses, everything goes down with it. Diversification protects you from that. Instead of investing in one company, you spread your money across many companies. And the easiest way for beginners to diversify is with index funds or ETFs. Think of them as a basket of many different companies. You buy one investment, and instantly you own a tiny piece of dozens or even hundreds of companies. This reduces your risk, smooths out the ups and downs, and gives you a more stable long-term path. It's simple, effective, and perfect for beginners who don't want to spend their life analyzing individual stocks. Step 5. Stay consistent. And finally, consistency. Think of investing like going to the gym. You don't get fit by going once. You get fit by showing up regularly. The same is true with money. Invest regularly, even if it's a small amount. Weekly, monthly, whatever works for you. This builds discipline and removes guesswork. You don't panic during market drops, you don't chase hype, you simply keep going. The market will go up, it will go down, that is normal. But if you stay consistent and stay patient, your long-term results will speak for themselves. Consistency beats timing, discipline beats emotion, and long-term investing beats guesswork every single time. If this helped you understand where to start, hit the like button and subscribe for simple weekly investing tips. This channel, Prime Capital Insights, is all about making finance easy for beginners. And in the next video, I'll show you exactly how to choose your first investment, even if you're starting with as little as $10. So stay tuned, and I'll see you there.